Hello traders, welcome back to the Trading Mantra, an initiative to learn and then trade. So in this video of Trading Mantra, we'll discuss about pivot points, indicator, a kind of an indicator which is available in every trading platform. So let me add the indicator first. Just adding pivot point. There's settings. There's nothing special in settings. Type is standard. You just need to leave it as it is. No changes. So the traders who don't know much about pivot point, let me give a small introduction. So the black colored line which you could see here is the pivot line, and on the upside the line which you could see in the dark red, which is R1, that is resistance 1. So next on the mild red color, that is R2, the resistance 2. Same way on the downside, a dark green colored line which you could see is the support 1, S1. Same way the light red colored S2, and very mild, I don't know whether you could see it, that is S3. Same way on the upside, this is R3, pivot, resistance, support. Simple. So now in today's section, very important topic which we're gonna discuss with the help of pivot point is, because every strategy, most strategy works in a trending market, either trending upside or a trending downside. But how to understand, how to first identify this kind of sideways market, because for an option seller this kind of sideways market is a gift where they can make maximum money on an intraday basis. Same way opposite, for an option buyer this balanced market is very dangerous, because more chances of stop loss triggering and more chances of, main important is the premium erosion, theta decay or time decay, whatever we can say. For an option buyers, premium erosion is a biggest enemy. So on a kind of a balanced sideways market, option buyers face many issue, especially option seller. As an option seller generally have patience to wait, because to option seller, if option seller want to make money, he or she has to wait so that the option premium can get eroded, theta decay can take place. But for an option buyer, very important is to identify the momentum. Whenever the markets are more sideways or whenever the markets are in more tight range, option buyer chances are more they can lose more money, or for an option buyer patience can be tested more. So in today's section, in today's video, we'll discuss about how to identify a sideways market. I'm not speaking about trending market, because trending market, any strategy, most strategy works fantastically in a trending market. But even a simple, let's assume this is first 15 minutes high and low. This is first 15 minutes high and low. On a trending market, if high breaks, if you are planning a buy side trade, fantastic. Entire day markets is trending up, good money is made. If 15 minutes low breaks and you are shorting, price is moving down on a trending market, you can make fantastic money. But what if market roam like this, up down, like the chart which you could see here, morning up, again down, sideways, small up, sideways, small down, sideways. Just price is trading in a tight range of 300 points from, for the whole entire trading session. This kind of trading session, option buyers can lose more money. So how to get rid of it? And second most important, for an option seller, this is kind of a special day, a day which should not be missed on a option sellers trading. So very simple. First, this is pivot. Okay, P, I'm just marking it as P. We are using R1 and S1. Simple. No other pivot, R2, S2, we are not using anything. Pivot line R1, that is resistance 1, and support line S1. Okay, so To identify market is gonna be more sideways, very simple. If price is trading in between pivot and R1, either R1 is not breaking and auctioning above, or P1 pivot point is not breaking on the downside and auctioning on below pivot point. If both the cases are not happening, price is roaming within pivot and R1, or price is roaming from the opening, I'm speaking, price is roaming within pivot and S1. In both the cases, more possibilities markets can be in a sideways mode. Again, this is from my experience. I'm not telling this is a sure shot 100% technique which gonna work in the Monday market which is gonna open. No, I'm not claiming anything here. This is just from my experience of observation, from my experience of live market. I just thought of sharing with you. This is a bank nifty chart. Look at this. This is a pivot line, this is R1. So from the opening tick for the entire trading session, either pivot is not breaking and R1 is not breaking, price is just roaming inside this. So this kind of a day is an easy day for an option seller, and for an option buyer it is a day. If you ask me, if you are a newbie trader or less experienced trader, you need to avoid trading on this kind of stock, or this is a bank nifty. So on this trading session, as an option buyer, you need to avoid trading on a bank nifty, because more possibilities, more the chance price can go in a sideways mode. I have also added VWAP, the red colored line which you could see is the VWAP. Look at this, price is just roaming above below VWAP. So this kind of days, more stop losses triggering. Same way, let's look at many examples. Let's look at one example on Nifty. Now same, this pivot R1 S1. If you ask me, minimum, don't consider, give more importance to first 15 to 20 minutes of trading auction. Why? Because more volatility is possible in first 15 to 20 minutes. If you just remove 15 to 20 minutes and then look if price is roaming around up in between pivot and R1 or pivot and S1, more possibilities. Nifty, in this case this is Nifty example, it can be in a sideways mode. Same way, why I'm telling to remove, give less importance, I'm not telling to remove, give less importance to first 15 to 20 minutes of option, means there can be a possibility in first 15 to 20 minutes market can be volatile if it is a gap up or a gap down opening. So if we are not giving more importance to first 20 minutes, look at this P pivot and this is S1. Now from this point price is just roaming between pivot and S1 till 115 120. One more time when price try to break S1, again reversal, again price is going into sideways mode. So very obvious is, again option buyers patience will get tested for sure, and this kind of market for an option buyer, premiums, if this is a day like Friday or Monday, premiums can melt if IV is huge. Okay, so same way, let's look some more example on bank nifty. So look at on this trading session, we have pivot one here, R1 S1. Okay, even if we remove first 15 to 20 minutes of auction, what I mentioned is price need to either trade in between pivot and S1 or pivot and R1, but in this case price is outside pivot and S1. So this they are very less chance market can be sideways, and it was like price was slowly moving down sideways and sudden spike towards upside. This is not a sideways market because our rule is not matching. Now let's take this example again. This is pivot S1. if we remove first 15 to 20 minutes of auction, price breaking S1 and it's slowly steadily moving down, a pullback upside again down. But our condition is price, my special condition is price either need to be spending more time without breaking S1, price need to be between pivot and S1. This is outside, so our condition is not favoring, so this market was not in a sideways mode. Let's look at some example in Nifty also. Now look at this. This is pivot R1. So we can take this in a different way also. My rule was, the rule was very simple. Price need to, if price is pending in between pivot and R1 or pivot and S1, then markets are sideways. Now price is completely outside pivot and R1. So more chance markets can give a better trading opportunity, or markets can be volatile, or in a simple term I can say market can be trending because it is completely outside our conditions. So like the condition where pivot and R1, now this is more possibility of sideways. Now price is entirely outside. Outside means imbalance. Imbalance means more possibilities. Markets can give a volatile up move or a volatile down move, or a trending up move or a trending down move. In both cases, option buyers can get a better trading opportunity to take entries. And when it comes to option seller, if an option seller know to do adjustment, then there is no issue for him. Now look at this trading option. This is pivot R1. If we just remove first 15 to 20 minutes of auction or give less importance to it, till almost 11:30 price was in between this range. So in this entire range, again markets were more into sideways, but interestingly, even price break R1, still price is in a sideways mode. This is an unpredictable. Okay, everything can't be predicted more precisely. That is what I tell. There is no 100% sure shot. Okay, now let's look at one more example. Yes, this is an example. This is pivot R1 and S1. Now look at, if we are removing first 15 to 20 minutes of auction, so price is entirely outside pivot and S1. So what I have told, if price is outside pivot and S1, there is more possibilities market can give a trending move or a volatile move or a momentum move. In every case, option buyers can get a trading opportunities. Again, for an option seller, if he or she know to make adjustment, then he can survive. On Bank Nifty, let's take quickly one more example. Yes. This example, this is pivot R1 S1. Now price was trading, if we just remove for 15 to 20 minutes of auction, price was more spending inside pivot and R1 till 12:30, 12:45. So till this point, markets were pretty sideways. And yes, later on we got a trending move. That is different scenario and different tools required to understand this. Okay, but till 12:30, 1 o'clock, markets were sideways because our rule was favoring, price was in between pivot and R1. Now just my simple intention is in this video is how to understand more possibilities a market can be sideways, because identifying a sideways market is slight difficult to trade, but trading a taking trades during a trending market is more easier. Now look at one more example here. I'm taking many examples to understand different scenarios, nothing special on it, because this is pivot R1 S1. If we just not give more importance to first 15 minutes option, price is in between pivot and S1, so more possibilities market can be in a sideways. So this trading session was entirely in a sideways mode. Let's take quickly one more example. Now look at this option. This is pivot R1 and S1. Price, we just not give much important to first 15 to 20 minutes of auction. Price was in between pivot and R1 till 1 p.m. So till 1 p.m. markets were sideways. So if this day is a Friday or Monday or even a Tuesday, if IV is huge, more possibilities option premiums can get eroded or melt, which is completely against an option buy.